You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Welcome back, Hamish. What's cracking, my friend? We are back. Yet another episode. Here we go. Episode 125. Woo-hoo. Trying to hype myself up. I'm trying to wake up.
Yeah, 125. It's a big number.
It's a big number. Yep.
Not really. I mean, kind of. I guess it is. But you're back in Canberra now.
I am.
I presume.
Yep, unfortunately. Yep.
Back there. How was the drive back?
It was pretty easy because I was using Autopilot.
Wow.
Oh, that's foreshadowing, isn't it?
Oh God.
We got an Autopilot story to talk about today.
Yeah.
But Tay, it's almost earnings season. Earnings season is upon us. We're starting to get a few companies with their earnings trickle in, and I guess over the next 2-3 weeks, we're going to get all the big boys coming out to play.
Yeah.
Telling us what's going on for what'll be Q1 2021.
Yeah.
Whether or not they actually call it that.
Yeah, or Q2 or Q7 if you're Zoom. Zoom
Q7 of 2035.
No, but yeah, there's a few companies that have reported. I'll talk about a couple of them, or will talk about a couple of them today, but nothing yet that's kind of big on my radar, I guess. Nothing that that's on my watch list or anything like that has happened yet. So
right.
I think the bulk of them are to come a little bit later. But it's going to be, as we'll kind of see over the next few quarters, I think it's going to be really interesting to see how businesses bounce back. Because some industries, like digital advertising, I guess like last year, well, for Google, their revenues dropped, but like Facebook continued to rise, I think, or didn't see that much of a drop. But for other businesses, they got absolutely crated. So will that bounce back immediately? Will it take 2 years, 3 years for some companies to get back to pre-COVID levels? So it's going to be interesting to see how they're rebounding now that we're starting to see some comparables to well, not yet, but we will start to see some comparables to the pandemic period.
Did you see some of the airline earnings? I think most of the airlines have reported.
Right.
I only saw headlines of the airlines, but they are still struggling. They're bleeding heavily.
Yeah.
I think Delta lost another $1 billion or something in the quarter or something ridiculous. But this is interesting because it's kind of like, vaccines getting out there. We're kind of working our way through it. Like the pandemic's still definitely a thing, but hopefully we're working towards a solution and towards a period of normality again. So the next few quarters will be interesting to monitor. Well, as people get vaccinated, as restrictions are eased or whatever, does that mean that their profits return to normal, or is it a case of nope, they're stuck paying debt, or it just, it's crippled their business too much? So I agree. It's an interesting time to pay attention. Pay attention, everybody.
Listen up.
Listen up to our talk. All right. So what we're talking Netflix earnings. We've got Chipotle earnings. We'll talk about Autopilot, as I said. Virgin Galactic. I actually wanted to talk Virgin Galactic a little bit as well. So some interesting things going on there. And of course, we'll leave some time, get to a couple of questions. Yes. With that said, let's get stuck into it, eh?
Yeah. So today's episode is sponsored by Sharesight, which is an application that you can use to track the performance of your stock portfolio. And it will basically allow you to track all of the types of gains you experience as an investor. So capital gains, dividends. If you have dividend reinvestment plans, then it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies, that's a super important one. If you're Australian buying US companies or really any variation of buying stocks in markets that are overseas, foreign exchange and currency exchange can be a big impactor, particularly with...
Gotta keep track.
Yeah, particularly with a lot of countries printing a lot of money. There's going to be a lot of changes and changes in interest rates and things like that. There's going to be a lot of different changes in fluctuations between currencies. So if you're not tracking it, you're basically blind. to what your real returns are. So using something like Sharesight to track that is an absolute lifesaver. And then it's also useful when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to work out things such as your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. And you can use that link to get 4 months off a yearly subscription if you want to sign up for some premium features. So go check it out if you're interested.
Sharesight is an absolute lightsaber. Man, when's the new Star Wars movie coming out? They haven't made a Star Wars movie in forever. I guess they're making all those TV shows, aren't they?
Yeah, I don't know. I think have we spoken about this? I've only seen one Star Wars movie and The Mandalorian. That's it.
All right.
So I'm not a
Hamish Hodder. What are you talking about?
We're kind of polar opposites on
that. What movie did you see?
The first one. What's it called? A New Hope?
Oh, A New Hope, episode 4. Right.
Yeah.
Right. Yeah. Yeah. Classic movie. Yeah. Yeah, it's one of my favorites, must be said. I'm a big Star Wars fan. But yeah, Mandalorian's all right. I don't know. I thought I'd like it more. I'm starting to get into it now, season 2. But yeah, I guess that's where their focus is, on a lot of TV shows. And speaking of TV shows, segue game is strong. Let's talk about Netflix earnings.
Well, not really a woohoo for Netflix investors.
Oh, really?
Because
okay.
They were very disappointed on average. Of course, that doesn't mean you have to be disappointed. I'm not saying if you're invested if you're invested in Netflix, you have to be disappointed by this. Yeah, overall, investors were not too happy about it. The stock was down 10% on earnings. So whenever that happens, you kind of want to dig into the numbers and see, well, what happened? What were the expectations? How far did they fall short of them? And what else is going on at the business in the next couple of quarters or whatever? So in terms of some of their key numbers, so revenue came in at $7.2 billion, which was up 24% year over year, which is really, really impressive.
That's good.
That's not too disappointing, I wouldn't think.
No, because I'm trying to think year over year. That brings us back to Q1 of 2020. So
correct.
Although I guess that is when people start. Yeah, that's impressive because that's when the lockdown started, right?
Yes.
But that's also good for Netflix because that's when they added a whole bunch of new subscribers.
Yeah. So the first quarter would have included March. Which would have had some of the pandemic impact there. But
which is good in Netflix's case.
Yeah, exactly. So you maybe their growth will be slower over the next couple of quarters comparatively.
Yeah, maybe.
But I don't know. 24% growth is fairly impressive. And of course, we can look into what is driving that growth. And it's fairly simple for Netflix. It's going to be somewhere between the average revenue generated by members or subscribers, and then also the number of subscribers that they added.
Yeah.
And this is where some of the disappointment happened. So they added 3.98 million subscribers. So they added 4 million subscribers, but their guidance the previous quarter, so what they said they were going to do was 6 million. So this isn't guidance from Wall Street or some outsider. This is the management team saying, hey, we're going to do 6 million. And then they hit 4. That makes it a little bit more interesting when they miss the company's guidance, because it's like the company was expecting something. It's almost like the management team doesn't quite know what's going on there in that case. But they have a total of 207.64 million subscribers now, which is up 13.6% year over year. So on a year over year basis, they've still seen a huge increase in the number of subscribers, which, they're up to 200 million. I wonder how high that number can go.
I don't know.
I would imagine assuming no competition, for example, that they would have quite a fair bit of room to run with that.
I would imagine so as well.
Yeah, I couldn't imagine them getting anywhere as saturated as something like a Facebook, where you have a free service which has billions of people using it. But maybe I'm wrong. Maybe billions of people will eventually have Netflix. But either way,
maybe it's very impressive though, it definitely proves to you once again that they are the market leader in terms of streaming. None of the other ones have 207 million.
No.
They're very far out in front. But yeah, you're right. You do wonder, and this is something I don't know the answer to. You do wonder what their total addressable market is. And you say, technically everyone in the whole world could have a Netflix account. Yeah, but it's not really their total addressable market. Was it Netflix? I think it was Disney. No, it was Disney that's trying to expand a lot in India at the moment, isn't it?
Yes. So, yeah.
And that tends to be, the plan of attack. These big companies start in the United States and then they really target, growing US customers. But then it gets to a point where the US business seems to be a little bit saturated. And so they go elsewhere. And I mean, this has been the case, you can think of Disney or Netflix or like Facebook. Now I think Facebook, they keep about the same amount of users in the United States, but they don't really grow. And basically all their growth comes internationally.
Pretty much, yeah. The interesting thing though with something like Netflix, and I hadn't really thought of this before, is with something like Facebook, it's very easy for them to use the same platform and basically present it to people in India or China or any country. Whereas when it comes to Netflix, especially in countries where the first language isn't English, you have to create content that is specifically geared. Usually, I would imagine created by produced in those countries.
True.
So in order to capture their attention, I mean, of course, you could have the case where you have a lot of English movies that have subtitles or dubbed language, but in order to really attract people, say in India, you would imagine that they would need more Indian created, produced films. So it is interesting.
Or they need to strike a deal with like Bollywood movies or something like that.
Yeah, and get licensing through that way. Yeah. Very interesting.
Because that's a good point actually, because you can imagine if all of a sudden, the Netflix of India came to Australia and it just hosted all of these Bollywood films.
Yeah.
Are you going to watch any of them? Like personally, no. I've never seen a Bollywood movie in my life. It's just something that doesn't interest me. I'm not saying they're not good films. It just doesn't interest me. So you're right. You would that would add a whole nother layer of complexity and cost, because then you'd have to invest in getting operations up and running, like film production operations up and running in, say, India or China or somewhere else. So that's a good point. I didn't really think about that.
Yeah. And then in terms of what management said on the back of these disappointing subscriber additions, they first re-quoted, which they've quoted for many quarters now, that during the pandemic period, there was a lot of subscribers that kind of got pulled forward and would have subscribed earlier than normal, just because it was the pandemic and people had nothing to do. So they blamed that again. And then they also blamed the fact that during the pandemic, production was limited. So during the first half of the 2021 financial year, there are far fewer shows being released on Netflix. Okay. And as a result, I guess it's a less attractive product. So they're also expecting that in the second half of the year, when production's back to normal now, but the releases will be back to normal. Yeah, not completely normal, but I think enough that they expect that the second half of the year will have releases on schedule as per normal. Okay. So second half of the year, they're hoping will be a little bit better. The next quarter, they had only 2 million subscriber ads that they're expecting or something like that. It was really low. So they're really not expecting...
next quarter?
Next quarter, yeah.
Oh, okay.
So next quarter is the really tough comparison from the previous year.
Yeah. In defense, that will look nasty, actually, if they only had 2 million versus like whatever it was, 10 million last comparable period last year.
Yeah.
In their defense... The management has said all the way through this pandemic that most of the subscriber ads are pulled forward.
Yeah.
That's fair. Like even when they added something like over 10 million subscribers in a quarter, they didn't get on their high horse and say, look how great we are.
Yeah.
They did say even back then, look, we know this is a very good result and we're happy, but we do think it's pulled forward.
Yeah.
So I think that's something to be said in their defense. I mean, people are probably getting annoyed because it's like, blame and pull for. Why don't you just try focus on growth or something like that? But in their defense, they've been saying this the whole way through. So it is fair enough.
Yeah, that is actually something to be said because whenever I read through a letter to the shareholders from Netflix, they are a company that leans on the side of optimism, but it always reads very like honest. It reads like someone is just kind of explaining what's going on with the business. It really is. It really doesn't read to me, at least, like a company that is doing a sales pitch. Like it feels like for a lot of, especially high growth tech companies. So it is refreshing to kind of see that they have an honest kind of perspective on things like that.
Yeah, absolutely.
Moving on into some other numbers. So average revenue per membership increased 6% year over year. So that's either a combination of people upgrading their memberships or them increasing their prices. So they were able to gain 6% from that. Net income came in at $1.7 billion, which was up 140% year over year.
Whoa.
And this is really where Netflix's business shines, right? In that besides content, if you take content out of the picture, how much they have to spend on production, if they have more subscriber ads, it really does not add anything to their other expenses in terms of marketing and technology and that sort of thing. And year over year, their profit margin has improved. So they had, what was the percentage of subscriber ads? Well, they had 24% growth in revenue. Their profit margin doubled from 12% to 24%. And I was actually looking at the change in expenses. If you just don't think about content, which they did spend more money, they spent less money on content. But if you look at all the other lines of expenses, they were pretty much the exact same, even though they had a 24% increase in revenue, which is just props to it's just the nature of their business model.
Yeah, absolutely.
Yeah.
That's clever. I love like looking at the little factors of business models and why they work versus why they don't. I find that stuff really interesting, but it makes sense in Netflix's case.
Yeah, and I was thinking about this and I'm like, wow, it really is an interesting business because if you imagine that, I can't remember the exact numbers, but I just ran some examples in my head. Like if they were able to triple their revenue over the next 3 years, but their expenses only went up by like 50% or 70% or something, they'd have a 10x in their profits, which is kind of really where these kinds of businesses can accelerate their growth if they can keep their expenses down.
It's all about scalability, isn't it? It's about finding a business model where it is scalable.
Yeah.
Yeah, absolutely. That's like one of the biggest things I like to try and analyze through looking at the business model. You think like a company like Facebook, very scalable. Very scalable. Definitely. In this case, you can see Netflix, very scalable. I'm trying to think of what's a business that isn't very scalable, something that requires a lot of people. Something like, I used to think about this back when I was working as a physiotherapist, right? And I used to chill out in the clinic and I'd see, whatever it was, 15 patients a day or something like that. And it's like that business is not very scalable because to see more, so there's a finite amount of people that I can see in a day just because of time. Yep. And then for the business to grow and for the business to see more and more patients, it means they need to add more and more physiotherapists. So the costs go up a lot. So it's like tight margins and it's hard to scale that kind of business. So that's what I definitely do like looking at business models. And I think more people should really get down into the nitty gritty of business models and see what's scalable and what's not. Yeah. Anyway, sorry, tangent.
No, that's exactly right. The other something I just thought about when you brought that up is like you don't see many big like accounting firms, for example, being a huge, multi-billion-dollar company because it just requires a lot of one-to-one contact or just a lot of people power. Yeah. But then what we are seeing in that industry is when there is accounting software that is scalable, where people, it's kind of DIY, do-it-yourself software for accounting for like small businesses. Those businesses are now really rising up because it's just a more scalable approach to a traditionally non-scalable industry. So kind of interesting. But the most important thing that we need to talk about with Netflix, the most exciting thing is the performance of some of their content.
So let's have a look.
Let's talk some numbers. So I've got a few here for their top performing TV shows and then top performing movies. Firefly Lane was a TV show, had 49 million views in the first 28 days, which is pretty impressive.
A lot of views.
Yeah, I mean, It is. It's kind of impressive. And I don't know how they measure these, I'll be honest, whether that's they have to watch half the series or just one episode or 1 minute of the first episode. I don't know how they measure this, but 49 million viewers. Cobra Kai had 45 million. Ginny and Georgia, I have no idea what that is, had 52 million views. That was the highest performing, actually, I don't think that was, I think it was the highest performing TV show during the period.
Right.
Fate, the Winx Saga, I don't know any of these. I haven't seen any of these.
Me neither.
Had 57 million views. Outside the Wire had 66 million views, and Yes Day had 62 million views. So that's some of their statistics and some of their big shows.
Man, I need to get back into Netflix because a lot of the, I don't know half of those ones.
Yeah, the only one I've seen on that is the first one. That's a really good series. So I would recommend that. But
would recommend Firefly Lane?
Yes. Good show. All right, moving on. The last thing I wanted to talk about with Netflix, I know we've talked about it for a while, so I'll just wrap this up quickly. But cash flow and debt is an important part of their business. So they're continuing to expect to be cash flow neutral for 2021. So basically, they'll produce no free cash flow based on how much they're going to spend on content. They think they are close to being sustainably cash flow positive, which means they're close to not having to rely on taking on new debt. But they still are at the current time reliant on new debt.
Yep.
They also announced that, and they said this for the first time, that they plan on maintaining $10 to $15 billion in long-term debt. So even when they get cash flow positive, they have no intention of paying down the debt that they've accrued. So that's kind of the situation you have if you're an investor in Netflix. And they also, this is ridiculous, they opened a $5 billion share buyback program, and they're going to start buying back stock next quarter, which to me...
That's dumb. That's stupid.
How can you even think about...
What are you doing?
How can you even think about buying back stock when your stock is at 100 PE, you're not cash flow positive yet, and you have $15 billion in debt? I just think...
That's garbage.
That's a little bit insane. It's
dumb.
It's a little bit crazy. I'll be honest. Because...
What the hell? Netflix, come on, we were just talking about how you're being honest management team and, you're not getting too carried away. And then this $5 billion share buyback program? No, I'm not standing for that. That's ridiculous. If you got $10 to $15 billion in long-term debt, you don't make any money, and you're at 100 PE and you announce a $5 billion share buyback program, get out of here. Get out of town. That is stupid.
It is disappointing, right? Because I really do like them as a business. And I do like, for the most part, their management team. I don't like the valuation, and I also don't like their debt. But there's like a couple of things. If a couple of things changed, if they just instead of opening a $5 billion buyback program, had said on that last line of the statement saying, as soon as we get cash flow positive, we intend to reduce our debt to $5 billion. Or, whatever.
Smart.
I would just be like, yes, this management team gets it.
Yes.
But
no. Come on. This just pisses me off. I mean, it's just, this sort of stuff is just playing with fire. It's like you have $5 billion. You could, as you say, pay back some of your long-term debt and reduce the financial risk of your business going kaput. But we're not going to do that. We're going to keep our stupid shareholders happy that have clearly pushed us to want to do a share buyback program. So we're just going to do a $5 billion share buyback program, even though we know that it's stupid. And sure, these dumb long-term investors short-term investors are going to be happy with us doing it, but our business is going to suffer for it.
I just can't imagine that. If they spend $5 billion on share buybacks at 100 PE, I just cannot imagine that is a better investment than $5 billion more into content. Like I
reckon.
I don't know. Like, who's crunching I don't know. Obviously, I'm no expert in this industry, so I'm talking as someone who has no idea about the actual analysis of that comparison. But I would imagine that if you talking about any kind of reasonable valuation on the business, then I just can't imagine doing that is better.
I'm trying to remember what was the budget for. There was something about budget for, what's that Martin Scorsese, Robert De Niro movie that goes for like 3 hours that's recent? The Irishman.
Oh, yeah.
The Irishman.
Yeah.
Irishman. I'm trying to look this up on the fly. Yeah, so The Irishman. I think that got knocked back a few times from various different film producers because of its cost.
Right.
That movie, which is a very respectable movie and was quite well received. It's got like 95% of Rotten Tomatoes. That cost $159 million to make.
Wow. Yeah.
159 million. Now let's do some quick maths. 5 billion divided by what did I say?
59 million.
159 million equals. So you could make 31 movies.
Yeah.
Come on.
And that's 31 huge movies. I think The Mandalorian, which was again one of the highest budget television series that they've ever made, was like 10 to 15 million an episode. So, around 120 million for the season. And that's like a show that is just like off the charts good. Like you could make it like a normal show is not getting that kind of budget. A normal show that may very well do very well. I'm sure some of the names that I listed out for Netflix of getting, 50 plus million views, I'm sure some of them may have had really high budgets. I'm sure Cobra Kai had a huge budget, but I'm sure some of the others would have had just, a $50 million budget or like a $40 million budget.
But it's like, instead of doing a $5 billion share buyback program, you could have made a next season for each of those TV shows you listed and a sequel to every one of those movies that you listed. Easily. It's like, come on, long term. Think the long term of your business. That's going to be way better. Anyway, I think our disappointment shows. Anyway, what happened to the stock?
Yeah, so the stock, as I mentioned right at the start, went down 10% on the news. And
that's right.
Look, I look at this and I don't know why you're selling it, except for the fact that I guess it's very richly valued, unless you have kind of you're very confident the business will do extremely well in the future, 3-4 times in subscriber numbers over the next decade or whatever.
Yeah.
So yeah, I guess expectations are just high. It's one of those businesses that did well last year, so the stock's kind of ridden on that, and any kind of slight mishap is disappointing to investors. So
yeah,
it is what it is.
Is what it is. All right, should we move on?
Yeah. Should we talk about where do you want to go? Do you want to go?
Well, I might just quickly jump in. I wanted to talk about Virgin Galactic last week, but we didn't get a chance. So this is kind of interesting because a lot of people are getting out of Virgin Galactic right now. Yeah. And big names too, not just like, Joe down the street decided to sell his shares. So I'll read you this. Virgin Galactic shares fell in trading on Tuesday, after ARK Invest Space Exploration ETF sold nearly half its stake in the space tourism company. Cathy Wood's firm sold 275,000 shares of Virgin Galactic from its ARK X fund on Monday, cutting the ETF's holding of the stock from 585,000 shares to 315,000 shares. Of the 39 ARK X holdings, Virgin Galactic was the 19th largest, but now it's down to the 33rd, making up just over 1% of the fund's weight. ARK also sold 315,000 shares of Virgin Galactic from its ARK Q Autonomous Technology and Robotics Fund on Monday.
Wow.
So that ARK ETF retains a larger stake in Virgin Galactic with 1.76 million shares. Together, ARK X and ARK Q hold a stake worth 46.7 million in Virgin Galactic stock as of yesterday's closing price. However, so ARK Invest have decided to pull the plug a little bit. But that's also after a little bit, some even larger names decided to pull out as well.
Oh.
So this is actually now going back to last week. As I said, this is a story I wanted to touch on last week, but I didn't get a chance to. So that's an update for this week. But last week, the story read, shares of Virgin Galactic also dropped. Oh, yeah, this is me. I forgot. I changed it. Shares of Virgin Galactic also dropped in trading last Thursday, erasing its 2021 gains after the founder, Richard Branson, sold more stock.
Oh, that's not a good sign.
Yeah, it's not a good sign at all. The space tourism company's stock has fallen more than 60% from its high above $60 a share in February, with losses accelerating after delays in its test flight program and share sales by Chairman Chamath how do you say his last name?
I don't know.
Pitaya, something like that.
Go with Chamath.
Yeah, I just say Chamath because that's what everybody else calls him as well. So share sales by Chairman Chamath and last month, and now Branson last week. So Branson and 4 entities he controls, including Virgin Group, sold just over 150 million of Virgin Galactic stock earlier last week. However, we got to he's got a lot of stuff on his plate, so we do have to kind of ask why. Why is he doing it? So it did say here, a Virgin Group spokesperson told CNBC that the firm intends to use the net proceeds from this sale to support its portfolio of global leisure, holiday, and travel businesses that continue to be affected by the unprecedented impact of COVID-19.
Right.
So there you go. And it's the second time Branson has sold Virgin Galactic stock to help Virgin Group. He sold about 500 million last May as well. So some big names getting out of Virgin Galactic.
Yeah, I think this, I'm just looking at the stock chart. I think from its peak, it's down, over 60% or something?
Yeah, over 60%.
And I think it's an interesting case study to look at businesses like this because, at least in my view, these kinds of stocks represent the tippy top of the most speculative part of the investment world. True. I mean, in terms of not the most speculative, obviously we spoke about a ridiculous speculative investment last week, which was a company that shouldn't have $100 million valuation. Yeah, I'm still getting over that too. But in terms of businesses that are really popular, that are also very speculative, Virgin Galactic is kind of in there. And we're also starting to see things like the SPACs fall significantly. They're really coming off. They were incredibly popular over the past 4, 5, 6 months really. Yeah. And Chamath he had a couple of SPACs come out recently, and they're all getting absolutely smashed as well. So it is interesting. To me, this may represent, because generally speaking, you kind of see the most speculative parts of the market fall first before it kind of trickles into everything else if there is something to kind of, if there is going to be a broad sell-off. So that'll be interesting to watch as these things kind of happen. Also, the Archegos thing is kind of happening all around the same time. We're seeing debt failures, and then the speculative investments really get sold off significantly. So,
yeah, no, that makes sense. And Virgin Galactic is quite speculative. I mean, I want them to do well. For sure. I would love for their business to be a thing of the future. But I mean, they're trying to be a space tourism company, which has never been done before. And they're only they're experiencing delays in their test vehicle. So yeah, it's going to be a long time before they actually start to generate, when they have a product or a service to even offer to people, and start to generate meaningful revenues that way. Interestingly, I don't know if you've had a look in this article, but I put how much a flight on Virgin Galactic's. I haven't looked. No, you haven't looked. Have a guess. How much would it cost? So this is a flight. You get to go up into the the last little fringes of the atmosphere and experience weightlessness for a few minutes, and then you fly back down and land on Earth.
Oh, okay.
How much do you reckon that flight may cost you? It's expensive.
I would imagine it's expensive. I'm just not quite sure where it would sit, but I'm going to say it's pretty damn expensive. I'm going to say, and maybe I'm lowballing this, but I'm going to say somewhere between, so just for a few minutes, right?
Yeah, it's only a few minutes. You go up there, you're weightless, and then you come back down.
Okay, I'm going to say maybe between 50,000.
50,000.
Yeah.
You are lowballing it.
Oh, really?
250,000.
Oh my God.
250 grand for a couple minutes of weightlessness.
Wow, I really thought I was being ambitious with that number as well.
50,000.
It's a lot of money just to spend for a couple minutes.
I mean, just go and just lie dead still in a pool. That'll give you the feeling of weightlessness.
Yeah, go do an isolation tank or whatever it's called.
Yeah, whatever they call them.
Yeah,
exactly. But no, it would be cool. It would be really cool. Imagine being up there looking down on the Earth and seeing the curvature of the Earth, seeing, a ball in front of you.
Wait, what?
That would be pretty cool.
Don't you mean to see the flat plane?
Oh, yeah, the flat cube, the rigid.
The cube.
Exactly. Wait, isn't the Earth a cube? Isn't that the new thinking now?
Cube Earth? I don't know.
Yeah, cube Earth.
There's a few variations.
Yeah. I don't subscribe to the whole Earth is an octagon thing though. That's just silly.
Yeah, no.
I don't know who came up with that.
Yeah, ridiculous.
It's either flat or it's cubed.
Yeah.
So yeah, one of the two.
Yeah, we'll figure it out one day. One day we'll go up. Yeah. We'll chip it. We'll go hard.
We'll buy 2 seats and we'll go up.
Yeah.
Oh dear. All right. Well, that's all I had to say about Virgin Galactic. But yeah, I don't know. You never quite know how much you can believe when someone like Richard Branson says, "Oh yeah, I'm just selling because I'm pulling money out to put it somewhere else." It's like, yeah, do I believe that, or is this the start of something bigger? I mean, Schmath's getting out, ARK ETF's getting out.
Yeah.
So yeah, and I mean, it's always a question mark. It's like a yellow flag, isn't it? When you start to see big names in a company selling a lot of stock, then it's like,
yeah,
it's like pay attention.
Yeah.
But anyway.
Yeah. I mean, I would not be surprised to see this kind of spread further out into the rest of the market because generally speaking, we'll see speculative stuff go first. But then, of course, sometimes speculative stuff just comes and goes and then there's more speculative stuff. So maybe we'll just see it money move into other speculative areas. I don't know. I think Bitcoin and cryptos were down this morning as well.
Were they?
Quite a bit.
Is this the end for Bitcoin? Wait, I got to go make a YouTube video.
Down 10%, 16% from its highs.
Okay. It's still decent.
Still very high.
Oh, of course. But the interesting thing about that is that it's changing direction. It's not just going up. Anyway, what should we talk about next? That's enough of Virgin Galactic.
Yeah, I think we should.
Do you want to talk about Chipotle?
Yeah, okay. Yeah, and I mean, we always have to talk about Chipotle because we have to talk about the Chipotlanes, which is
of course, which is our proprietary business idea that Chipotle licenses off of the Young Investors podcast.
Exactly. Yeah. For those who don't know, very early in the Young Investors podcast, we came up with the Chipotlane, and then Chipotle just stole our idea. So we're currently in legal action against them. Yeah. To try
and we're going to go. Yeah. We're going to try and recover licensing fees that should have been paid. Yeah, royalties. Exactly.
So we're a bit salty about that, but we do keep up to date with.
We're a bit salty about that.
So we do keep up to date with Q1 2021 earnings, but I don't have too much to say with Chipotle, but their numbers are just off the charts, ridiculous as always. This company cannot be stopped. Yeah. Revenue came in at $1.74 billion, which was up 23% year over year. Same store sales growth was 17%, which is again just ridiculous. I mean, a good restaurant same store sales is like 5%. 5%, you're really happy. 17 is just off the charts. Wow. And apparently in the next quarter, when comparing to the pandemic period and then, year over year, the same store sales growth is going to be something like 30%, which is just insane. Of course, it's a bit of a non-important comparison because you're looking at a restricted period and a non-restricted period, but just goes to show like how much they're bouncing back. Digital sales made up 50.1% of total sales and hit over 50% of their total sales for the first time, which is very interesting because...
so that's where a lot of that growth might be coming from.
Exactly. And they've really been one of those restaurant businesses that, because they're kind of almost fast food, is classified as fast casual, they were able to adapt very quickly to doing digital sales. And people just kind of ate it up rather than other restaurants where it's much more required that you go and dine in. A lot of those restaurants struggled to adapt to the pandemic. But Chipotle has done a very good job of it.
Nice.
Net income came in at $127 million, which was up 65% year over year. They also spoke about how online pickup orders actually have the best margins out of all of the different types of orders that they take. And that's followed by eat-in and then delivery last, of course. Delivery is the bulkiest and the most difficult.
Delivery costs.
Exactly. But they're actually, of course, encouraging digital orders if people are picking up because it apparently is better margin. They said that they raised menu prices by 13% for delivery to try and boost the margin in that place.
Makes sense.
And
they got to try and cover that cost a little bit, don't they?
Yeah, exactly. And I mean, that's always going to be the case. I think food's always going to be more expensive if you're going to get it. If you're going to get it delivered, it just has that added step that requires delivery. Exactly. And it's not something like it's not really something that can be the cost can't really be spread out. Like the person has to maybe they do a couple of deliveries at once, but they still have to come to your house and drop it off. And at most, even in a really, I mean, obviously in the cities it will be better because there's more density and they can take more orders, but there's always going to be cases where it's really, really expensive to just deliver like a hamburger or something like a burrito.
Yeah.
The CEO, something the CEO said that I thought was interesting was that they think dine-in customers are completely different to delivery customers and that they actually don't expect digital orders to decline as restrictions are lifted and as people kind of go back to normal. I don't know. I find that hard to believe. I would imagine there's some portion, maybe it's true that there's some portion of digital orders that are just new customers, but I find it very hard to believe that there are not going to be people who go from being digital through the pandemic back to dining in. I would imagine that they would see a pullback in digital sales, but I don't know. The CEO doesn't think so.
Yeah. Or potentially could be the other way around where dining customers have figured out that the online ordering is far more convenient. So now they just do that instead.
Right. Yeah, exactly. But even that is against what the CEO said. He's saying they're completely different. So
no, I think that I don't think Chipotle is so sophisticated that they have two types of client. The people that like to come in and sit down and then the people that like to... That's like saying for like, I don't know, something like Subway. It's just like, here at Subway, we have the people that like to get their sub and then sit down and eat it in the store. And then we also have those people that like to take their sub and go. It's like, they're the same people. They just want to get their Subway.
I don't know. Very, very, bit of a strange comment, I thought, by the CEO, just the way that it was worded. But that leaves us, drum roll please, to how many Chipotle
here we go.
We have. 20.
That's my terrible drum roll.
You interrupted my announcement.
Oh, sorry. Rewind.
Right. 20 new Chipotlanes were installed during the quarter.
20. Nice.
Yeah, they're really expanding.
Man, I hope we get one day, I hope when they're laying down that nice new concrete of the Chipotlane, I hope they stamp our names into one of them. This Chipotlane is dedicated to Hamish and Brandon of the Young Investors podcast.
I hope so.
That would be nice. Maybe we could add that into our legal case.
Yes, we should do that. Yeah,
we'll try and squeeze that out of him as well.
That on top of the free burritos for life that we're trying to get. So
true. Yeah. They really don't want to give us that.
No,
can't believe it. I mean, it's the least you could do.
I know.
I mean, how much do we hype up your flippin' Chipotlanes? Maybe we could make it free burritos for life only when using the Chipotlane. Maybe they'd be more open to that.
Yes,
so that's more in line with our vision.
Yep.
There you go. 40 new stores.
Yes.
40 new stores, 20 new Chipotlanes.
Correct. So they have not put.
And just remind me, sorry, I'm so. We make a joke out of this, but Chipotlane is just a drive-through, isn't it? Yeah.
It's just a drive-through. It's just for picking up digital orders. That's basically.
All right. Okay. Yeah. Cool.
Yeah.
I don't even know what it is. Actually, there's nothing fancy about it.
Yeah, actually, in their release, they didn't call it a Chipotlane anymore. They just called it a drive-through, I think. Maybe that was a CNBC article. I can't actually remember where I read it, but that would be hilarious if they stopped. I actually will write an angry email to them if they no longer call it the Chipotlane. Such a funny name. I love it. It's so good.
Anyway, Chipotle, they're doing well. I almost said Chipotlane again. Just call your whole business Chipotlane. They're doing well, aren't they?
Yeah, unbelievably well. Very impressive for a restaurant business.
Yeah,
really can't.
Took a punt with the online stuff, and it's worked out wonders for them.
Can't knock them at all.
Yeah, very good. All right, should we talk about Tesla Autopilot?
Yes.
Oh my gosh, what the hell is going on here? This sort of stuff just annoys the crap out of me. So you may have heard during the week, 2 men were killed after a Tesla car crashed into a tree and caught fire in Texas. and police believe there was nobody present in the driver's seat at the time of the accident.
Dun, dun, dun.
Dun, dun, dun. The 2019 Tesla Model S was traveling at high speed when it failed to negotiate a curve on a winding road. The victims, both in their 50s, were found in the front passenger seat and in the back of the vehicle.
Right.
So I should start out by saying this is obviously an incredibly sad event. And obviously you hate to hear about these sort of things happening. But I do have a problem with the way that this story is being portrayed in the media. Because the way that the media are skewing this story is completely incorrect. And to be honest, it's I don't even know what the right word is. It's irresponsible, I suppose, to report this story in this kind of light, because of course what the media outlets are saying is, oh, this is ridiculous. How can a Tesla car be able to drive itself with no one in the driver's seat? And autopilot fails again. Autopilot was supposedly on and it's driven them straight into a tree or whatever.
At high speed as well.
At high speed, yeah. But the thing is, okay, so I have a Tesla and I use autopilot all the time. The seat has weight sensors in it, and you need to be sitting in the driver's seat to be able to activate autopilot.
Right.
Yeah. So if you're not sitting in the driver's seat, you can't be on autopilot. Full stop.
Right. Okay.
Full stop. Also, beyond that, autopilot, when you activate it, will not travel faster than the speed limit. Okay, the car has like 8 cameras around it. It reads the speed signs. It knows the speed limit. And if you tap autopilot on, you can put cruise control on without autopilot, so just cruise control, and then you can speed. It allows that. But if you are letting the car do its autopilot, then it will not go faster than the speed limit.
Wow. Well, I mean, that sounds logical.
Yeah, it is logical.
To have that in place.
You can make autopilot go faster than the speed limit if you activate it and then you put your foot on the accelerator. Then autopilot will continue to drive the car.
Oh, okay.
And you can push the speed up. I think that's maybe so that, I don't know, maybe you can pass somebody or something like that.
Yeah.
But normally on autopilot, you've double tapped your right stalk, it's gone ding ding, and then it's doing the steering wheel and it's doing the speed as well. So you don't have your foot on the pedals and you just have your 2 hands lightly on the steering wheel and the car's doing everything for you. So anyway, so first of all, with those facts in mind, this already makes this media portrayal of this story incredibly silly. And somebody he pointed this stuff out in a Twitter post, and then Elon Musk responded to that Twitter post saying, "Your research as a private individual is better than the professionals at Wall Street Journal. Data logs recovered so far show autopilot was not enabled, and this car did not purchase full self-driving. Moreover, standard autopilot would require lane lines to turn on, which this street did not have." So there you go. I mean, it's pretty black and white. I mean, the facts are definitely in Tesla's favor here. And while it's a very sad story that some people, maybe they used the car incorrectly, maybe they thought they had autopilot on, and that's maybe led to an accident because they didn't realize that it wasn't engaged. It's very, very obviously a very sad situation, but I do get very frustrated when this stuff is falsely portrayed by the media to try and smear Tesla's name, when at the end of the day, they are doing more than any other car company to try and make driving safer.
Yeah, that's a really good point. Like, their whole business is trying to reduce human error and create a product that does that, and having news articles kind of just blast out that it failed when it may not have, or, well, now we pretty much know it hasn't because of what Elon said. It is kind of interesting. Before Musk's tweet post, I think it was pretty fair to say that it was possible that that someone could have driven, because I mean, to play devil's advocate to the fact that you need to weigh the seat and you need to have your seatbelt on, and as you said, you can't go faster than the speed limit unless you put your foot down on the accelerator. I have seen videos of people who have like used weights and that sort of thing in order to make a stupid TikTok, and then they sit in the back seat and go to sleep, and then they get back in the front. So to play devil's advocate, before Elon tweeted that they have the data, they have the logs that show that they didn't even own full self-driving and autopilot was not
enabled.
To be fair, I think that was the case. What I actually think,
you could have gamed the system. You could have if you wanted to.
Exactly. What I think now is more likely, and I heard this from somebody else. I can't remember who said this. I think maybe Graham Stephan said this. What is probably more likely is that they were not using autopilot. They launched, because it was right outside of the person's house. Like it was on like this dirt road, like just outside this person's house. They were probably in the driver's seat and the passenger seat. And the guy's launch controlled out of the front seat, out of the garage, hit the curb and hit the tree. And because the car is crumpled at the front, he's crawled into the back seat to get away from the fire because he couldn't go out the side door. And as a result, you have a passenger in the passenger seat who may have been unconscious already, and then a person who's been able to crawl into the back seat to try and escape.
True.
That to me sounds like the most likely outcome, assuming that Elon is not lying that autopilot was not being used. Because if he's like, obviously Elon could lie about this.
He could,
But I would lean on the side of saying that he's not lying about it.
So I don't think he'd open himself up to that kind of reputation damage.
Yeah, exactly. If we found out that it was actually autopilot was being used, then it really puts into doubt everything that he's ever said.
Yeah. So, and I guess that is a good point that you raise, and maybe that is what happened. I guess we'll have to wait and see what the actual forensics or whatever they do conclude. But yeah, I just wanted to leave this story with a note that you really have to, whatever you read in the media, make sure you read everything with a grain of salt, and really only listen to the facts. For example, I just wanted to leave you with the Tesla, what do they call it here? Tesla vehicle safety report. Some statistics out of the vehicle safety report, and they report this every quarter. And this is the statistics that they use to evaluate whether autopilot is getting better or not. Because of course they're always tweaking it to make it safer and safer and safer. And that is the main use case for autopilot, is to make driving as safe as possible. Because a lot of people die when they're driving cars, and that's not good. So from this Tesla vehicle safety report, the most recent one, for the first quarter of 2021, Tesla registered one accident for every 4.19 million miles driven in which drivers had autopilot engaged. So one accident every 4.19 million miles.
Wow.
And then by comparison, the NHTSA's most recent data shows that in the United States, there is an automobile crash every 484,000 miles.
Wow.
So you think about that. One crash every 4 million miles on autopilot, or one crash every 484,000 miles. I mean, the data shows that autopilot is vastly safer, vastly superior than any human driver, and it's only going to get better.
Yeah.
And that's why I get really annoyed at the short sellers, the media that are against Tesla, trying to skew this and say the autopilot is not ready, shouldn't be allowed, blah, blah, blah. I mean, if anything, the statistics say that it should be allowed more than anything else,
Yeah.
So it pisses me off, man. It really it really annoys me. Triggered.
Yeah.
Brandon, triggered.
It's just one of those things. It makes a good story. Makes a good headline. What?
Exactly.
There was a car that was driving without a driver in the driver. Like, it makes a good story. So it's obviously going to get picked up everywhere and misconstrued, but it is disappointing.
But the reporting is irresponsible. The reporting in this, it's like reporting that vaccines cause autism. It's like that reporting is irresponsible. It's like reporting that you shouldn't get the coronavirus vaccine because it causes blood clots. It's just very irresponsible to report in that manner, even if the headline is amazing and you're going to earn a whole bunch of money. It's like, we need some journalistic integrity here. I mean, some of the stuff you're reporting has, this example is going to convince some people that Tesla Autopilot is not safe. Oh, pisses me off. Anyway.
And how does that make you? Guys. How does it make you feel, Brandon?
Therapy session. Needed to get that off my chest. All right, I'm feeling better. I'm gonna go drive my Tesla on autopilot later and prove to the world that it's safe.
That's great. Anyway. No, that's an amazing story. Obviously, very, very tragic. But I guess we'll find out the full details of everything at some point in the future, or probably not actually. Once they figure out that it wasn't, or they prove, I guess, however they do that it wasn't in full self-driving. Yeah, no one's going to report that. No one cares.
Whatever. We already made our money saying that it was autopilot.
Yeah. There'll be another Tesla crash by then, and then they'll just report on that one.
Yeah. Oh dear, sorry, we ended up talking a long time on that.
Yeah, we did.
Golly gosh, we're running out of time. Should we switch over to Q&A?
Yeah, we've got a really important Q&A we've got to get to first, and then we'll jump into some other ones. Tom, Investing with Tom says, have you packed your toothbrushes now? The borders are open.
Yes, let's go to New Zealand, because that's actually an update. The New Zealand travel bubble. We are allowed to travel to New Zealand now. How exciting is that? Let's go.
Yeah, we're going to have to.
Let's go.
We're going to have to book that in.
Yeah, absolutely. Man, I would actually like to go to New Zealand. I love New Zealand. To be honest, New Zealand, it's just like, feels like you're in Australia, but the scenery is like a million times better.
Right. Well, that's good.
Yeah. Because it's like, the shops are the same. You drive on the left, yeah, New Zealand accent's different, but I mean, we're all talking English. It feels like you're almost in Australia, but then you just look around and you're surrounded by these epic mountains and huge lakes that seem like they're oceans. Oh, it's unreal.
Oh, no.
I love New Zealand.
Once I go, I might not want to come back.
Yeah. Oh, well, I think a lot of Australians move to New Zealand because they like it so much. Yeah. Wow. Yeah, I think that's quite common. Yeah.
Amazing.
No, I love New Zealand.
Yeah.
All right. Should we do one actual Q&A question?
Yes, yeah, we probably should actually.
I haven't even looked at some of these.
No, just...
Should we just find one?
Yeah, just click on the one you...
approximately.
Maybe.
Jeez, I'm under pressure. I'm trying to find one. How about this? Let's do one that's a little bit different. This one's from Kelvin. He says, hey guys, any advice for someone just starting out with YouTube? I'm a personal trainer and started making some videos about my investment journey. And I guess my worries are that people will be judgmental of this sort of content from someone in an unrelated field who is chasing fire. How do you both go about telling people about your YouTube channel, etc.?
Yeah, well, first of all, I mean, there's always going to be a small percentage of people who are going to be judgmental regardless, but
absolutely.
I guarantee you there will be far more people who are interested in exactly what you have to present, even if it's really, really specific. I think it's actually good to be quite specific when you start out, because you can get like that core base, core subscriber group that are really passionate about your content, and then you can kind of broaden it out a little bit over time to capture more people. But in terms of advice, I mean, beyond the normal advice, post consistently, post on the same day, try and constantly improve your content over time. I think just finding out the channels that have the biggest channels in the particular area that you want to look at, and just see what content they're posting and which content is working well. What are people interested, ultimately checking what are viewers interested in seeing within that particular field, and making content around that, and putting your own unique spin on content in that way.
Yeah.
That's kind of a couple of things. Have you got any advice?
Focus on the title and the thumbnail, obviously, especially when you're new, because
that's true.
You don't have that core base of people that are just going to click on the video anyway. You have to try and attract people when it gets recommended to them. So that's obviously a big one. But just on what you're talking about, how you're a personal trainer and you're getting excited with your FIRE journey and investing and that sort of stuff. I mean, yeah, I can understand. Some people will be judgmental, and you'll get some comments like, oh, what do you know? You're a personal trainer. But I think the important thing is just be really open and honest. Be like, hey, I'm a personal trainer, but I want to, improve my finances. So I'm getting started looking into all this FIRE stuff and investing. And if you're really honest about it, then, people will gravitate towards that. They will appreciate your honesty and they will want to go along to that ride with you. And in a lot of cases, you'll be able to be more relatable because it's just like everybody else. Most people aren't investors, they're not every day looking at computers for 8 hours straight on different companies to buy. They go to work, then they come home, and then they think about what can I do for FIRE. And in all honesty, that's the way that I started out as well. I'm very open and honest in saying that I don't have any formal qualifications about economics or finance or stock market investing, none of that. Commerce, I didn't study it at uni. I was just a physiotherapist, kind of similar to what you're doing. I was a physiotherapist and I figured out, I need to do something with my money to make sure I'm going to be good for my retirement. And then I got really interested in that sort of stuff. And so I started making content about it. But there was never a time where, I BS'd my audience and said, look, I'm some financial expert and you should trust what I say because I know everything. I think just coming from an open and honest point of view and saying, hey, look, I don't know everything, but we're on this journey together and I'm starting this thing up and, let's learn about FIRE and, I'll share what I know with you guys, what I've been learning about. That's the way to do it. And that's the way to be relatable and be honest with your audience. And that'll build trust and you'll get more viewers because you will be very relatable. So
definitely.
That's what I would say.
Yeah. Engage with your audience as well, especially when you have only a couple of people leaving comments on your videos at the start. If you really engage with people, that's
build a community.
That's something that people like about following smaller channels is that they know that on some smaller channels that if they leave a comment, they'll get a reply. That they've actually got that kind of connection. It's something that you unfortunately lose when you have a larger audience. We can still answer some questions, but of course we can't get to every single one. You'll be sitting there for hours. But that's an advantage you actually have as a smaller creator is you have a small audience, so therefore you can really engage with them, whether that's in the YouTube comments or you have a Discord or a Facebook group or whatever it is. Having that connection with your audience is really, really valuable. People really like that. And then just think about, because most of us watch a ton of YouTube ourselves. So just think about, what do you look for? Like, what are the videos you're clicking on? What are the thumbnails that attract you? Because in many ways, you're also going to be your own audience. So you can kind of use that as a starting point to figure out how to approach things such as thumbnails and content, and then just listen to your audience and see what they're liking.
Yeah, absolutely. Hamish Hodder, well done, mate. We have gotten to the end of another podcast.
We did it. 1 hour down.
1 hour, man. We just kept talking today, didn't we?
Yeah.
We just kept yammering. Anyway, that will do us for today, guys. Thanks very much. We do still have a fair few Q&A questions to get through, but if you would like to add one in, and we'll try and get to it in the next couple of weeks, then head over to the YouTube version of the podcast and fire away in the comments section. Could be a question, could just be a discussion topic if you want us to cover something. Last week, somebody just wanted us to talk about SPACs. So that's why we talked about SPACs. So yeah, if something interesting comes along and you want us to talk about it, just let us know and we will discuss it. That'll do us for today. Thanks everyone for listening. Thanks for giving us an hour of your time each and every week. We certainly do appreciate it. Of course, this podcast is nothing without you guys, so we really do appreciate the support. And that will just about do us for today, I think. So with that said, thanks to Sharesight for sponsoring this video, and we'll catch you guys next week.
See you guys.